What's going on, traders? It's Mike from CapitalHillFX, and in this video, we're going to be going in depth of all the different types of trade orders that you could make in the foreign exchange market. There are 5 different types of trade orders that you can make. We have market execution, buy stop, sell stop, buy limit, and sell limit. And we're going to go through each type of trade order in depth right now in this video. So we're going to start off with the most simple, basic type of trade order. We have market execution. And this is basically just saying you want to enter the trade right now at the current market price. So we're just going to insinuate that we're trading bounces off of horizontal levels like I do. Let's say price came into a significant horizontal level and showed bullish or bearish price action around this horizontal level that's convincing enough to make us enter the trade right at this moment. We would place a buy off of the support zone or a sell off of the resistance zone right at that current market price. So there would be no delay or lag in the trade order from where current market price is. You would be entered exactly where that price is. Now let's go into a buy or sell stop. So I like to refer as a buy or sell stop as a hedge order, right? So let's say that we placed a sell at this significant horizontal level, but if price continues to go towards the upside, then we want to have a buy position right above the zone just in case we rocket towards the upside. This would be our buy stop, right? A buy position is placed above where current market price is, and if price continues to rocket towards the upside, we will capture that upside movement. Or potentially, if you place a buy stop above a significant horizontal level, maybe you're just trying to trade the breakout of that zone, right? So if price just continues to rocket towards the upside, you're capitalizing on that bullish move. Inversely, if you have a sell stop, maybe you're placing a buy around this significant support zone. And if price doesn't work out for you, you'll have a sell hedge right below or a sell stop. And if price just melts towards the downside, then you will capture that bearish bounce as well. Or like I just said for that previous instance, maybe you're just trying to trade the breakout of a support level. So if price just melts towards the downside and we break out of this significant hourly, daily support zone, you'll get a good idea that price may continue towards the downside if you want to capture that bearish bounce. That means that we are capturing the downside move, right? The sell stop is going to be below where current market price is. So a buy stop and a sell stop, they are also known as hedge orders. That's what hedge orders are. It's just the opposite position of what you placed in the market. And it could also be utilized for breakout traders whenever price comes to a significant support or resistance level. You're saying to yourself, okay, I'm going to place a buy or sell stop above or below the zone just in case we rocket or melt towards the downside below or above this zone. So we went over market execution, then buy and sell stop. Now the last set of trade orders, it's buy and sell limit. So buy and sell limit are a little bit different than the others. This is when we want to wait for price to come to a significant price point before actually being entered in that buy or sell. So for a buy, we have broken through this significant horizontal level. Now we're just waiting for price to come back to this significant horizontal level before being entered into a buy. Remember, this is very similar to a buy or sell stop, but instead of price going towards the actual order, it's actually retracing back towards the order, right? So in this instance, if we continue towards the upside, then we actually get entered into the order. But in this one, we have to continue towards the downside before actually getting entered into a buy order, right? So this is more or less waiting for price to come and retrace back to the buy or sell order before actually getting triggered into that order. Maybe you don't understand it still. Let's go into the sell order. So in this example, we break through this significant support zone. And again, in a regular sell stop, if we broke through the significant zone, we would have been entered in this sell right when price broke through the zone, right? We would have been entered in the sell and we would be accumulating profit right when we were pushing through this bearish impulse. And then when we come back to this significant horizontal level, let's say we have another sell limit placed at this significant horizontal level. That's basically just saying that price is just waiting to come up to this significant horizontal level before we actually continue towards the downside. So a buy or a sell limit is waiting for price to come back to the significant price point before actually getting entered into that buy or sell. The buy or sell stop, I like to refer this as a hedge order. It's basically just saying, okay, if price breaks out of a zone or a significant price point, I want to capture the upside or downside move off of that trade order. And then market execution is basically just executing a trade right at the current market price. You're not waiting for price to come, retrace back to a significant horizontal level, or wait for price to have a bullish impulse towards the upside and break out of a zone. You're literally saying to yourself, okay, I think price is going to move towards the upside right at this moment. Most traders are using market execution as their means to trade the foreign exchange market, but it's very advantageous if you know how to trade them to use buy stops and sell stops and buy limits and sell limits. So hopefully this went in depth of how to utilize different types of trade orders in the foreign exchange market. If there's anything I left unanswered or you would like addressed from the different types of trade orders, please leave a comment below. I would love to be able to provide some more clarity or provide a different video going in depth about these different types of trade orders. So this is Mike from CapitalHillFX. I hope you all have a phenomenal trading week, and I'll see you guys on the next one. Cheers.